One expert warns the dollar loses reserve status in 5 years, while another says the Treasury has a big stick to save us.
From a 70% drop in housing investors to the $40 trillion debt clock, the math is changing fast.
Where they clash, where they agree, and every expert's bottom line in about 2 minutes.
George Gammon, the veteran macro researcher, says the dollar loses reserve status in 5 years as central banks buy gold.
But Danielle DiMartino Booth, a former Fed advisor, says the Treasury's $4 billion buybacks manage the debt without the Fed.
Wait, so George sees a countdown, but Danielle thinks the Treasury has it handled?
Exactly. George watches the global vault, while Danielle watches the Treasury's balance sheet.
Both Nick Gerli, the housing analyst, and Danielle Booth agree the big spenders are pulling back.
Nick sees a 70% drop in investor home buying, while Danielle sees consumers skipping discretionary wants at Walmart.
So whether you are a Wall Street landlord or a family of 4, everyone is tightening their belts?
George Gammon's bottom line: governments are ditching treasuries for gold.
But he thinks it takes 25 years for business to move away.
Nick Gerli, the institutional landlord era is over as the math fails.
So housing prices could finally reset to 2019 levels?
Danielle DiMartino Booth, a dovish Fed, is watching the consumer crack.
Watch the discretionary spending data to see the true slowdown. That's the verdict. The full breakdowns and data receipts are linked below.
Hit like and subscribe right now so tomorrow's verdict lands in your feed. We do this every day.